Hey traders, welcome back to another video. We thought we'd start off this one looking at the market cap of different asset classes and traditional stocks and kind of the legacy markets here. We see gold being the number one in terms of market cap at 11 trillion. But the main focus for this kind of list is to understand where the other cryptocurrencies are within the realm of basically market caps or asset classes kind of globally. So right now, BTC is just under the $700 billion mark. We see huge corporations and conglomerates like the Saudi Aramco, Microsoft, Amazon, Apple, all these companies are above it, but not many companies, not really any financial institutions are above BTC. It's even above Berkshire Hathaway, Warren Buffett's basically company there. It's a brainchild to some degree. And then we see if we go further down the list, not far behind is going to be Ethereum, which is a larger market cap than PayPal, which is unbelievably huge. And as the list goes down further, you can see companies marketcap.com is the place to look. I highly recommend looking at some of the market caps and comparing them to your favorite altcoins or even BTC, so you have a good understanding of kind of comparables for market cap, because we see many different alts and people think it's going to go to 10,000 for Ethereum or all these different numbers that is going to go to 15, 20 bucks. But then if you actually look at the market cap potential of, let's say, Cardano at $10 or $20, it gives some perspective as to how large they're going to have to become and how much capital they're having to have inflows in order to actually make that come into fruition. So something to think about, something to look into, just for a little bit of perspective, in my opinion. So definitely look into that if you are interested, because there's a lot of information here and it's a really good way to compare cryptocurrency market caps to companies that you use every single day. Nike at 211 billion, way below Ethereum, kind of gives you an understanding of how large Ethereum is. Now moving on to kind of the next image, we're going to talk a little bit about the kind of different sectors of the cryptocurrency world, of the cryptosphere. And I think this is something that many people don't really pay attention to. They just clump cryptocurrencies into one large pool. And yes, they are, it's a new asset class altogether. But we do see within the world of crypto, there's different sectors. Like there's a payment currency, which would be like Litecoin, Bitcoin Gold, Bitcoin Cash. Even Dogecoin is kind of the fork off of Litecoin, so that would be bundled up within there. And then you see computing, data management, cloud services. You see protocols, exchanges, interoperability. All of these things are creating its own kind of niche, or own kind of sector within the cryptocurrency realm. The main things we're looking at, platforms, huge. We think Ethereum is going to do really well. I'm not in Cardano, but a lot of these kind of platform we are looking at, as well as exchanges. We see things like protocols, exchanges, and interoperability, BNB, PancakeSwap. All these coins are kind of within that sector, which I think is very, very bullish. Something I don't have a tremendous amount of exposure in would be the privacy coins. We see Monero, Zcash, Horizon. All of these would be within that category. But there is, and then we see other ones, fintech, others, business enterprise, gaming, media, social media. All that is very useful. Something that isn't within this periodic table that has recently emerged is going to be the meme coin market. Dogecoin is on the list here for the periodic table right there, number 13. It started in 2013 as a fork from Litecoin. And as of right now, hopefully you guys do know the meme coin market is absolutely booming, especially when the overall cryptocurrency market was doing well back in kind of the start of 2021 all the way until the springtime. We saw things like Shiba Inu take a $3.5 billion market cap as of right now, which is pretty unbelievable compared to where it started, and basically marketed itself as a meme coin, or a Dogecoin killer is what they're kind of marketing as. And then we see many of them come market. Pretty unbelievable. You know, some of these market caps are pretty unfathomable for a joke currency, in my personal opinion. But this is a new sector that is a fad to some degree. I think some of them will stick. Like I think Dogecoin will stick around. But having real world use case projects to invest in is really important. And looking at these different sectors will give you a little bit of a better understanding as to how to better manage your portfolio in the world of cryptocurrencies. Because if you're only investing in exchange tokens, obviously that's not fantastic. You're missing out a lot of opportunities with privacy tokens or fintech or all these different use cases that blockchain has, you're missing out on. So being able to diversify your portfolio in these different sectors within the cryptosphere would be a very positive thing in my personal opinion. So that's going to be my overall kind of start to the video. Hopefully you guys are doing well. This is the time, in my opinion, to be buying the dip. And then the first thing we'll look at within the charts is going to be the COT analysis, which is the commitment of traders, COT, and this is for BTC. This information is readily available. It's not just for cryptocurrencies. You could look at it, let's say, in the FX market to understand the whales or the major buyers and sellers to know what they're doing. And then this is the indicator right here. And this is the simplified version. If we take a look at the settings here, we see institutional, trader, professional, retail. We don't really like to look at that. The main thing we're going to be looking at is the percentage open interest held by the 4 largest longs and the open interest held by the 4 largest shorts. This is mainly like the biggest buyers. A lot of them are going to be whales in the mining space. But we can see taking a little bit of a look back in the previous time frames, we see the major buying when there's a big dip, major selling after the dip in terms of what they're doing. And then you see, as of right now, we're not going to go too far into it, but basically this is what the whales are doing. This is the indicator that illustrates the number of shorts, number of longs, and what the big money is actually doing in the cryptocurrency market. And as of, let's say, 2021, late 2020, we've seen that there is not a lot of sellers coming in terms of major institutions, in terms of whales. Pretty favorable reduction in the number of shorts, which is great to see. In my view, that does not mean that the bull run is over, because the whales, the institutions, the smart money is still adding to their positions and not taking any positions off, or not even close to shorting, where we see kind of a bottoming formation, and then you see the increase in buy pressure from the whales, from the institutions, from the large buyers, and a reduction in selling. So if the smart money is buying more and selling less, that to me illustrates that there is still a lot of momentum yet to come in terms of what the smart money is looking at. So that's going to be my overall view. Just looking at the COT analysis, we're going to switch into BTC, looking at the price action and the volume, but that's just an indicator that it has been kind of peaking at, looking at to see what it is doing. So that gives me just another level of validation that this is the bottom at around 30K. Now, like I said, let's just zoom back a little bit. In my opinion, we are going to see a little bit more of a consolidation. So this isn't the kind of final bottom before we get that major move to the upside. But let's just take a quick picture and illustrate exactly what we are anticipating here. So we think that this is the higher low bottom. This is the first low. This is the second low right here. This is the first one. And then the third one could potentially come in. It could be a little bit short or not too much of a drawn out consolidation like we saw right here. But we have been mentioning this for a while. This is our first wave. I think we're going to get our second wave where we are going to get a move to the upside through this symmetrical triangle. We're going to get a little pop out, but I don't think that's going to be the time to be entering your leveraged longs. I think there will be one more kind of consolidation hitting maybe like the 48 to 55-ish zone, somewhere around here. I think there's going to be some resistance. We're going to have a slight pullback, slight consolidation, and then that's going to wind up to further contract the volatility, which then will set us up for a great opportunity for a massive parabolic push to finalize the BTC bull run. So there's going to be a little bit of patience that does need to take place, but overall our view is that this triangle will break to the upside. We're going to be patient because I don't think it's going to go straight up like this. I think there's going to be a little bit of consolidation, a little bit of correction until we get that next push higher. So that's going to be my overall view on a technical standpoint, looking at the daily chart. We've already saw, in my opinion, our capitulation phase on May 19th, where we saw a massive push to the downside. Price hit $30,000. We haven't seen that much relative volume really since, let's take a look back here, zooming all the way out. Wow, yeah, since like May of 2020. So it's been a long time since we've had this much volume, such a short amount of time, which would indicate a capitulation event. So in my opinion, we've already seen the bottom here, lots of wicks to the downside. We're going to see a slight consolidation, but at the end of the day, the overall long-term bias is still bullish, and I think we have completed a bottoming formation here. So let's take a look at the smaller time frame. It has not broken out yet. We had a small little dip to the downside, which completed our third wave. We'll take a look at that on a smaller time frame here. So when we are looking at this, let's take another screenshot. We see a nice sloping descending zone and a lot more aggressive series of higher lows, which in my opinion is really great to see, right? When you see aggressive higher lows coming into play, you see that buyers are buying the dip a lot quicker, and then there's a contraction. If it was an ascending zone, it'd be less ideal for me, because if you're seeing that slight contraction where you're barely able to make that higher high and that higher high, and it's getting less consistent and less momentum coming in for the long side, that could create another dump to the downside. But we're seeing contraction, which in my opinion is a really good play possibly. Let's quickly just make this volume a little bit more in terms of size. Not much that we're able to see right now, but we do see some buy pressure coming in compared to the sellers. We see more buy pressure coming in compared to the recent sell-offs that we've had. But going back to the price action, this is our first wave, big first wave, and then the second wave right here, and this is the third, because we like to see on our descending wedges, ascending wedges, triangles, we like to see three waves create the formation of our structure. And this is the first wave right here, this is the second wave right here, and this is the final third wave. So we are expecting this to hold. Lots of confluence for the buy side on this higher low, where you see this ascending zone right here, you see this ascending zone right here, you see horizontal zones right here. Lots of buy pressure within that $37,000 zone for Bitcoin. So I am expecting this to hold, and I am expecting this to consolidate, contract, and then push to the upside, where we're going to be forming that second high. It could go all the way to like the 50K zone, like I did say, but I'm going to be a little bit hesitant for any leverage longs until we see that massive triangle, which is right here, actually break to the upside. But I think this formation and this structure is kind of clear to me, at least, that we are going to be forming that nice triangle. This is going to be that higher low that we've been anticipating, and we're going to have that nice strong push to complete the end of the bull run, kind of closer to 2021 there at the end of the year. That's going to be my view. Not going to jump in too much further. Our analysis has not changed. Our viewpoint has not changed at all for this market. We've been talking about this major symmetrical triangle zone for a very long time, how we finally completed our first wave right here. We're now at the bottom of the first wave, coming into the second wave, which in my opinion this is coming into right now. This is going to be the bottom of the first wave right here, and we're going into the second wave. Slight consolidation, and the third wave completion is going to be where we're really going to be looking for opportunities for our leveraged positions. So, excuse me, so a lot more patience I think is needed, but it's looking very favorable for our opportunity that we are speculating that's going to occur. So, going to be pretty patient, but it's looking pretty great so far. Now we're going to be touching a little bit on some of the better altcoins that we're going to be looking at, and then we're going to finish the video off looking at some of the meme coins that some people are looking at. Not all of them are going to be on TradingView, so we're mainly just going to be looking at ones that have decent history in terms of the price action, as well as decent volume, and is actually being able to be seen on TradingView. So going to get a little drink, and then we're going to jump right into Ethereum. All right, so we haven't discussed the Bitcoin dominance chart yet, but in a bull market, Bitcoin dominance is going to move to the downside because a lot of alts are going to be appreciating at a greater rate than BTC. Within Ethereum, in my opinion, because we're looking for a large structure for BTC, I think Ethereum is going to have to wind up a little bit. So if we're looking at this formation, we do see a nice reverse head and shoulders right here. There is the left shoulder, head, right shoulder, so there is a reversal formation right here, where the target is going to be around $4,400, which would be a great opportunity, because if this is a bottom, and we're able to hit that target right there, let's say we go here, and we pull back a little bit, and then we're winding up. That gives us a perfect opportunity for a pretty large ascending triangle formation. Now, it doesn't have to be this big. It could be a pretty quick one after we hit that second high. But for any ascending zone, we do need 1, 2, and 3 validations of a horizontal level of significance and a series of higher lows, at least 3, in order to form a nice ascending triangle. So there's still a little bit of time before we actually get that nice triangle formation. What else could happen is if we don't actually hit the reverse head and shoulders target of around 4,400, we could see something like this. But I'm expecting a continuation pattern to come into fruition. I don't know exactly just yet. I think the higher probability one will be the horizontal zone because the head and shoulders target is basically right at that $4,400 zone. So it would be great to see an ascending triangle formation. So let's look at a smaller time frame to look at this head and shoulders here. Alright, so Ethereum on the 6-hour chart, the left shoulder is right here, the head is right here, and the right shoulder is right here. Neckline sitting at 29.37, somewhere around there. And we're seeing a little bit of a windup right here, where we're getting a series of low, higher low. I think we'll make a little bit of a higher low, but we're seeing a nice trend line push up the price towards its major level of resistance at the neckline. This size of the reverse head and shoulders is lining up really well with the top at around 4,400 for Ethereum, like we did state. So in my opinion, if we are able to get a nice push from BTC breaking out of the symmetrical triangle, 1, 2, 3, and if BTC goes to the upside like this, I expect Ethereum to break out of its reverse head and shoulders and then continue to push to the upside towards the $4,400 level, where we're expecting some level of hesitation and a larger continuation pattern to set up. Now, we could be wrong. It could start absolutely ripping, and that's why we need to have investment positions and leverage positions, because if it does break a little bit early, you're not just sitting on the sidelines holding a stable coin, which is not something that you want to be doing in a bull market. So having different portfolios or having different capital allocation is pretty important if you are looking to leverage trade, because you don't want to be carrying a leverage trade through the entire bull market. Let's say you put on a leverage trade at 50 grand for BTC, even if you only did a 2x leverage, you've basically liquidated your position, right? Depending on which exchanges, you might be okay. You'd be at 25K in order to get liquidated, and we stopped at 30K, but it'd be a pretty close call, and if you were at 55 or 60, you'd be completely donezo. So understanding that it's volatile and using leverage should only be taking place in times of major certainty that it will move to the upside or downside is a pretty significant factor, because you could very easily blow through your money during a bull run, and you could have just invested that and been just holding spot, and that would have been a better outcome because you wouldn't have been liquidated, and when it does inevitably rip to the upside, breaking that all-time high, you're still in the trade. So not much more to talk about on Ethereum. I think that there's still a little bit of time before we start to see that next major push to the upside, but I think it is coming soon enough. And we saw a major amount of volume coming in. Let's see the last time we had that much volume come in on Ethereum, which I don't even know when that might be. Basically at the March COVID crash. So pretty unbelievable. I think that is a capitulation phase that we were currently in. Some people taking profits, some people over leveraging because all they see Ethereum do is go up. So then they just do 10x, 20x, whatever the case may be, dumps to the downside, they get liquidated, they get all sad, and then people like us who are more patient are able to take on the positions before the next leg up. So I think some patience needs to be taking place, like I did say, but overall, it's looking very favorable. We see a reversal here with the break at around 29.37. When that does break, I think we will see a pretty strong momentum push to the upside, but I don't think it's going to be the next major push to kind of commence the second half of the bull run just yet. I think we're going to have to create a larger formation for these bigger alts like Ethereum before we actually have that next major bullish push to continue the altcoin run. So that's going to be Ethereum. Definitely something to keep an eye on. I think there's a little bit of time before we actually are going to be looking at leverage trades, but definitely keeping an eye out on that one. Dot's something that we've been looking at as well. It was creating an expanding formation, which isn't absolutely awesome. I don't love it. So we're currently looking at this right now in terms of kind of a channel where you see a series of resistances right here and a series of supports that is now turned into a resistance. So in my opinion, what we're seeing right now is a little bit of hesitation, but let's just take a quick look right here. And what we're going to be looking for is something along the lines of this zone breaking right here and us going back into this trading range, because right now we're below it. It's not looking phenomenal because this is a major level of resistance because it was a strong level of support. Every single person who bought in since, let's say, mid-February is now in the red, which is creating a decent amount of fear in the market, in my personal opinion, just looking at the charts as well. No one's really green if they bought between this time and this time. So some fear coming into the markets. If it does have a little bit of a slight move to the downside, not to worry, because we do see a series of higher lows. So even if we do see a slight dump to the downside, we're still seeing a series of higher lows. We will drop in a smaller time frame to look at this zone and this structure, but overall, I do expect this to start trading back within this range right here, and that's where we're going to be looking for opportunities, because we've had a dip down to the downside, and you can see target has been met and surpassed a little bit. So at this point, we're just already hit the target. We're trading in this range. We're winding up, because we'll look at a smaller time frame, to get back into the box. And what we're ideally looking for is for the price to get back in here, and then looking for some structure where you're squeezing up against a major level of resistance, because we see lots of sellers dumping the price back down. And I think if it does break, we're going to see a pretty big rally. Now, we could see something like this. We're seeing a slight descending zone. Let's draw that in a little bit better. And then you see our first wave right here. You could see a second wave and then a third, where you see a series of higher lows and lower highs, creating a symmetrical triangle. And then you're seeing that nice strong push to the upside. And then you're looking for that continuation pattern around the $35, $45 range. So that's going to be my overall outlook on DOT. Like I said, for a lot of these alts, there's just a lot of patience that needs to take place, but it would be great to see an opportunity where you see a lower high and then a lower high and then a higher low from this higher low. So you're seeing a nice triangle formation, and then this is a expansion in volatility and then a contraction in volatility before the next expansionary phase like we saw. So that's going to be a great opportunity for DOT. Definitely going to take a look at the smaller time frames, but overall, I think this is a really good project. Same sort of structure with the head and shoulders. Now, the neckline just got touched right here, so it does make sense that we're getting a little bit of a pullback to form a complete right shoulder, because the armpit has just been touched at around the $29 range. So this is the left shoulder. Hopefully everyone can understand. The head is pretty obvious. That's the capitulation event. So you got the left shoulder right here. This is the capitulation event. You could argue that this is the right shoulder and this is the armpit, but I'm going to assume that this is the armpit, and we could see a little bit of a tumble even back to this support zone. I don't mind, because that would still form a great head and shoulders, where the, let's say, $29 range is the major level of resistance. Once we're able to break that, we're going to be trading within this range, which is going to be looking a lot more promising for Polkadot. So a little bit of patience. We're looking for some structure right around here. I'd say it's a little bit too early to look here for leverage opportunities. For buying a dip, really good opportunity, but for leverage, you have to be more careful. So I'm going to be waiting until the price is setting up above the $40 range, looking like a great opportunity before we actually partake in any leveraged positions for Polkadot there. So a little bit of patience, but I think the time is coming. Let's go back to the daily chart on that, just so we have a good understanding, and then the daily chart on Ethereum as well. Next thing, a lot of people have been talking about Cardano. A lot of my colleagues who are less interested in cryptocurrencies seem to be always looking at Cardano as like the first or second alt. I know Mr. Hodgkinson is pretty active in the YouTubes, so maybe that might be it. A lot of YouTubers are talking about ADA, so not exactly sure why they're picking that one over some others. Doesn't really have smart contracts implemented yet, which is something that like Ethereum or Solana do have, which is a huge positive, but marketing does play a pretty big factor. So Cardano is holding the series of higher highs and higher lows, which is fantastic. And relatively, Cardano is actually doing a lot better than most projects, which with the buy pressure would make sense. And then if you're looking at just straight continuation patterns and only looking at the technicals, Cardano does seem very favorable in terms of an opportunity compared to some of the others that we'll talk about a little bit later in the video. But overall, still holding the expansion pattern, which is great. We're kind of right in the midpoint right here where we see a resistance and a support in the midpoint right there. And ideally what we're looking for is to see this ascending zone hold right here. This is the major level. Oh, this is the major level of support. Let's draw that in a little bit better. There we go. And we see lots of wicks to the downside, indicating buy pressure coming and picking it right back up. And you see quite a bit of relative volume coming in the sell-off with lots of wicks, indicating that that is a capitulation phase. But we are really close to the all-time high at like $2.60 or 50 cents. We're really close to that, which is better than most. Most are still down 30-40%, whereas Cardano is only down from its all-time high at around 28%. So relatively speaking, it's holding it better than a lot of other alts. So great to see from a relative strength standpoint. Now what we're looking for within this formation would be a opportunity where you're seeing an expansion phase break to the upside, where you're seeing first, not great, your second, not great, and you're going into your third, and then you might get a blow off top here. The third does not have to reach the bottom. We've already had our first, second, and third touch, so our third wave could set up like this, where you're getting an ascending wedge from an expansion pattern. So let's say we're getting an expansion pattern like this. You get your 1, you get your 2, and then you get your 3, and this could form like an ascending wedge like here, and then it could rally to the upside and melt to the upside. That could be the possibility here for Cardano. Like I did say, a lot of patience does need to be taken place, which makes sense looking at BTC, but that's going to be the opportunity we're looking for. So initially, that was the expansion pattern, and we're looking for a contraction like this, where you're seeing a squeeze from a series of higher lows and higher highs, contract the volatility before we start our next expansion phase. So a little bit of time that does need to take place before that comes into fruition. Let's look at a smaller time frame dropping from the daily. Let's go to the 6 hour and let's draw our ascending zone just like that. So let's connect the higher lows right there, and let's connect the higher highs with a line like so. And that's exactly what we're going to be looking for. If it does pop to the upside, that's going to be the next formation where we're looking to see around that $2.80 range, hold one last time, and then we're going to see that nice rally melting up from this ascending wedge. So that's going to be the opportunity that we're going to be looking for. If that does fail and break to the downside, we might be looking for a structure similar to this, where you're seeing a wedge formation like that, and then a break to the upside. We are testing that low at like 112, 120 one last time before we move to the upside. So that's going to be your 1, 2, and then that third one, little slight contraction at 250, and then that rally up. But either way, those are going to be opportunities to look at. I think that there's still a lot of time before they actually come into fruition, but those are the two different structures that I'd be looking at for Cardano for leveraged opportunities. So let's zoom out of that, and then the last one that we'll take a look at is Solana. If you don't know, don't exactly know how many transactions it can do in a second, like 50,000 transactions or something in a second. Pretty unbelievable. Really great opportunity. Nathan did initially kind of notify me about this, and I'm kind of hooked after I saw the capabilities that Solana has. Solana also has a reverse head and shoulders if you are able to identify it. Let's take a picture. A lot of these alts are showing reversals, which is fantastic. Let's get this. This is the left shoulder. This is the head. This is the potential right shoulder, but I think this is going to be the right shoulder right here, because where is the neckline? In my view, the neckline is going to be right here. If we drop down a time frame, let's go to like a 1 day. You can see the neckline could be a little bit higher. The 2 day might be a little bit better, maybe not. But you see this major rejection off of a major level of support. Maybe if you go like that, That could be a better option. This just touched the neckline. The May 27th high at 35 did not. So when we are looking at the 6-hour time frame, I'm viewing the June 3rd high at $41 to be the armpit for the right shoulder, getting a little bit of a pullback, and then you're going to wind up for this reverse head and shoulders move to the upside. So it's looking like it's basing really well. Now what we don't want is to drop below this low right here, because if it does, that means that we're not gonna get a series of higher lows. It's gonna be a lower low, indicating that the reverse head and shoulders is invalidated. The last thing that we do want to touch on is this trend line right here, where you see not really a higher low, but you're still seeing that nice trend if you're looking at the candle closures. So ideally, you'd like to see this hold where you're, even if you are dropping, you're seeing this series of higher lows hold. You might be seeing something similar to this on a larger time frame. We don't exactly know, but it does look pretty favorable, with the $26 range being a major level of support and the $41 range being a major level of resistance. So we're just contracting right now, which isn't bad, which is just a market breath after we've seen a massive parabolic push from February at $6 all the way to basically $60. So a 10x move. Makes sense that we're going to see a little bit of a pullback, some hesitation, people taking profits, but I think this next windup is coming for SOL, which is Solana. So let's just take a quick look. Another option is if we don't break this zone, we could see something like this. This is a massive dump. You could see something like this. We're seeing a nice ascending zone right here in a horizontal level of resistance, and you see a nice ascending triangle formation. And then once you break above that $43 range, that's going to allow price to really start to trend back up. So those are a couple possibilities that I will be looking at for leverage opportunities. But until then, I'm just going to be slowly accumulating, because this is a really fantastic project that I have a lot of confidence in, and dollar cost averaging at these lows is not a bad idea in my opinion. Still has a lot of room in terms of market cap as well, compared to some of the other larger projects like Cardano, Polkadot, and Ethereum. All right, so the next series of tokens and coins we're going to be looking at is in the decentralized exchange space. I have not used 1inch, but PancakeSwap, SUSHI, and Uniswap are all things I have used. Pancake is my favorite based on the Binance Smart Chain network. Super easy to use, very cheap in fees, especially when we're seeing Ethereum hit all-time highs. To trade on Uniswap, it was hundreds of dollars, which just does not make sense compared to trading and buying on PancakeSwap, which is basically pennies compared to what Uniswap and the ERC20 network has in terms of transactions. So first, looking at Uniswap, we did see that nice ascending wedge form. Unfortunately, it did break to the downside. We are still seeing a reverse head and shoulders, like a lot of other structures. Now this is, if you're looking from a short side, it would be an opportunity for a short, because you're breaking the ascending zone, holding that previous support as a new level of resistance. I think this is a bear trap where people who are looking at BTC and the overall cryptocurrency market to take another move to the downside, this is a really good opportunity for a short if you have that bias, because you see a series of higher highs and higher lows, slightly creating an ascending wedge similar to this. Now, I do not think that this is a short, but this, if we were in a bearish market, this would be a good opportunity for a short, in my personal opinion. But I'm not shorting. It makes no sense in a bull run. The amount of profit that you can make to the downside is not even close to the potential opportunities you can make to the upside. Now, you can time shorts, great, but in my opinion, I'd just rather wait patiently for that long opportunity that is going to emerge a little bit later in the future. So let's look at a smaller time frame, but overall, that's going to be something that we're going to be looking at for opportunities to the downside in a bear market. But in a bull market, just does not make sense. So you see slightly higher highs where the third high is not able to make it to the previous high, which is a little bit bearish. It's not really showing a lot of strong momentum to the upside, so we could see a little bit of a move to the downside, but I don't expect it to go very far. A major level of support that I do want to see hold, which would hold the reverse head and shoulders formation in place, would be the $22, $23 range, right around there. So if it breaks below that, we could see a invalidation of the reverse head and shoulders. So then we'd be looking, instead of a reverse head and shoulders, we might be looking for, let's say, like a wedge formation. So that would be the reverse. That would be the resistance there. And then you're looking for something along the lines of this, where let's get our structure right here. So this is the reverse head and shoulders. Boom, boom, boom. And that's like that. But if this does fail, to hold this zone, we could be looking for a wedge similar to right here. Now it doesn't have to hold this because we see 1, 2, 3, 4, 5. You might not count this one, but you definitely count this zone and this zone being second and third touch. So you already have the descending zone validated as a level of support where you see lots of buy pressure around this zone. And then you're looking for the first wave. This is the second wave. And the third wave could be something where we could be forming a symmetrical triangle and then pushing to the upside. So that's going to be the structure that we're looking for on Uni. Could possibly go down like this, but I don't think that's going to be the case where we're seeing a large descending wedge form. I think the higher possibility is if we're going to be holding this low, and then this could be your first wave, second wave, and the third wave could form a triangle right here, and that's going to be your opportunity where you're seeing a very deep contraction in the volatility before the next expansionary event. Even if the transactions are high, like we saw back in February, March, April of 2021, people will still take the plunge to purchase ERC tokens and sell them and transact with them, paying $200, $300, $500 per transaction. People are still willing to pay that. So I think it will do well, but something to keep an eye on if you're a retail trader or if you're just kind of anticipating retail traders getting fed up with paying so much that they're looking for alternatives. PancakeSwap, in my opinion, and in the Performante team's opinion, is a phenomenal opportunity because it is a decentralized exchange that is on the Binance Smart Chain that allows traders to transact digital assets extremely cheaply in a very easy to use platform that has a great UI, which is PancakeSwap's UI there. So same sort of structure. We see a reverse head and shoulders. We do see a series of lower highs right there, and then the target for this reversal head and shoulders is around the $35, $36 range. So I think if it does reject there, we could see a symmetrical triangle formation. Hopefully you can see that. Let's just turn that into a line. And then you see a series of higher lows, lower highs, making a major symmetrical triangle formation, kind of similar to what we saw within the large time frames of Bitcoin, where you saw kind of the October break, and from that break, we initiated our bull run from 12K all the way to 60K. So these formations and contractions and volatility are extremely powerful, and seeing it on our favorite alts, just like PancakeSwap, is a great opportunity. I don't mind holding because you can stake Pancake for some crazy gains, like 125 to 140% APY. Pretty unbelievable. So you're able to basically accumulate more cake while holding. If you want to leverage trade and accumulate more cake that way, definitely a good opportunity. I remain a little bit more patient until that next opportunity does arise, but having coins and projects that allow you to make more of it during these consolidations will just allow you to have more at the end of the bull run, because if you're making 140% of cake while you're just able to hold it throughout the year, that's pretty phenomenal passive income and will really benefit you, because you're able to get that double compounding effect when it does start to appreciate again. So not much more to talk about at Pancake. I think there's a little bit of time. Could be an opportunity to enter at like the $23, $24, $22 range, up until like the $32, $33, $35 range. But in my opinion, would be a little bit of hesitation for me to enter, because I'd rather just wait until the larger triangle formation does come into fruition. Then we can lock in our leveraged trades and really be in the money. So that's going to be the opportunity that I see with PancakeSwap. A little bit of time, a little bit of patience, just understanding that it's totally okay to have a consolidation in a bull market. I don't think that the bull market is over just because of the 50% correction of BTC. I think there's still a lot of room for alts to ride, so that's how I'm positioning myself. SUSHI swap, not fantastic. You see a key level of resistance at $22 and a series of lower highs. Kind of closer to the low, so not fantastic. What we could see is something similar to this, where you're seeing a slight wedge here. within the lower half of the expanding formation. I'm not really looking at this right now because there's nothing that I have a whole lot of edge trading within this formation, but it does look like it's kind of bottoming here. Let's look at a 6-hour chart where you see a key level of resistance right here and then a series of higher lows. So you are seeing a significant bottoming formation kind of near that $7-8 range. Could get you a little bit higher, but I'm going to be pretty patient until we break that main level of resistance at 22 before we look for any opportunities. So in terms of Sushi Swap, I don't think that this is going to be my top favorite for decentralized exchanges of DEX. I would say that Uniswap is obviously number one for the ERC20 tokens, and then Pancake is the best for the Binance Smart Chain. So those are going to be the two main DEXs that I will be looking at. And 1inch is a decent one. I'm not really looking at it too much, but it's good to have an understanding of the different DEXs, not just the ones that are your favorites. So still a lot of opportunity. Haven't used their platform or anything, but it is holding its ground pretty well. Pretty similar structure to Uniswap, actually, if you're looking at it. So if we take this off, and if we take this off, you see an ascending wedge, you see an ascending wedge. It broke and now it's testing its previous resistance right here. Very, very similar structures overall. So we're going to be looking at it in a similar type of structure as it plays out. Next thing we're going to be looking at is some quick charts looking at MakerDAO, Stellar, XRP, and OMG. Not going to get too much into them, just kind of illustrating the relative strength. Now, OMG, Omnis Go, is not showing any sort of relative strength, but it is pretty low compared to things like XRP. What we saw like back in the start of 2021 is at 30 cents, and now it's basically at $1. Stellar's holding up pretty well compared to 2021. It's at 39 cents. It started off at like 12 cents. MakerDAO is doing pretty well as well, starting off at like $500. Now it's at like 3,600, and OMG is not doing fantastic relatively compared to its comparables in kind of a similar sector in the crypto sphere. So not going to get too much into it. We do see XRP holding pretty well. You see a nice wind up formation right there. Stellar's around $33, $34 range is holding up really well as a key level of support. MakerDAO is at like 2,800, just under 3K, holding really well. And then you see a nice formation structure with a descending wedge formation right around there. So these formations are great to see. And then also, if I didn't draw in, XRP's 75 cent range is a major level, and you're contracting with the descending zone against that 75 cents level. So great to see Stellar winding up a little bit, as we can see right here. Could be a little bit of a pop off and then forming a larger zone, as we can potentially see right here. So I do think that there's going to be a little bit of patience that need to be taking place. It's kind of the theme of the video. But I think a lot of people in the cryptocurrency market, because they've been maybe like since like September, October, November, even like the start of 2021, a lot of alts and Bitcoin has basically been going up non-stop since that point, or since they've been in the market. So they're having a lot of difficulties being patient when things aren't going up 24/7, 7 days a week, every moment of the day, when you have to have patience and you have to have confidence in the project when it's going down. And that's the most difficult thing, I think, for a lot of people, is they have all the confidence in the world when things are going up, when things are going their way, when they're making money, when profits are coming in, which is fantastic. It's a great feeling. But to have that same level of conviction and confidence when it's red, when it's going down, when it's a little bit bearish, is a lot more challenging when they are facing adversity. So this is the time to understand your project pretty thoroughly, do a lot of research, do your due diligence, and make sure that you have the confidence, because that will allow you to hold during bearish times. Now, there is market cycles. I'm not saying to hold your project forever and ever unless you're able to stake it for a decent ROI and you're completely all right with holding that 2-year period of the bear market. But if you are looking to cash out near the high, or potentially near the high for this current bull run, I don't think that's a bad opportunity. I think it's a great opportunity. Hold your cryptocurrencies in like a stable coin, stake it at like 6% or whatever through multiple exchanges so you're diversified. That is the way I'm going to be looking at kind of finalizing this bull run, is holding a lot of money in cash, keeping some in staked cryptocurrencies, but majority is going to be in staked cryptocurrencies that are stable coins. So I'm able to slowly buy the dip and short some opportunities when I do see them, because a bear market is inevitable. It's not if, it is when. In 2017, no one expected that 20K would be the absolute high. People were thinking 100K. Institutions are coming in. And I think that this bull run is going to be somewhat similar, where a lot of novice traders are just going to be expecting things to be continuing to push forward and going higher and higher, higher, where you got to be looking at PA, you got to be looking at good analysis. The COD is a really good one to use. The BTC dominance is a really good one to use. All these different charts will really help you get a better perspective of the overall market. So, not going to be talking about this section much more. I'm not going to be looking at that at all. The next thing we're going to be looking at, let's just keep an eye out on Ethereum, is going to be the meme coin market. Hopefully everyone has been at least understanding that the meme coin market is absolutely ballooning. And this is kind of the theme that we've seen for this bull run of 2021 compared to 2017's bull run, where 2017 was a lot of ICOs that was making a lot of money. Now it's going to be meme coins. Now, there is a plethora of meme coins, and we saw in this right here, not all of them are going to be on TradingView. Like, you can't see SafeMoon on TradingView, you can't see a lot of them, but you see these market caps. Dogecoin at 48 billion. Shiba Inu is 3.5 billion. That's unbelievable. SafeMoon's at 2.2 billion, and these are really just coins that people made on a whim because they thought it would do well. I don't exactly know the reasons for each one, but they don't really have a goal or a problem they're trying to solve. Like, for example, Solana or Ethereum, they have real world use cases, whereas things like Dogecoin, Shiba Inu, Akina Inu, Doge Elon, they don't really have real world use cases other than a token to transact in. Where if that's the only kind of benefit or real value, I think there's better opportunities. But we do see, as we can see, massive market cap decimations for basically all meme coins. But if you believed in Shiba Inu, or if you believed in these coins prior to the moonshot that they had, like with Doge Elon or Akina Inu, why not invest now? They're basically as close to as low as they can. Obviously, it can go lower, but the risk reward is pretty unbelievable if you actually believe that these hype coins will continue to progress in terms of market cap. Like, Dogecoin is actually doing pretty well because it's holding a series of higher lows. That's actually great to see, as we can see right here. And it's squeezing. Had a little bit of a pop off top right here. And I think that we're going to see a little bit of a move up, a little pullback, and then you'll be looking for that next major kind of more symmetrical triangle that we're looking at. And then Dogecoin, I think, is going to be potentially moving up to $1. I think that's going to be something that we will see in this bull run. A lot of hype around it. Elon is obviously favoring Dogecoin compared to really every single meme coin or even cryptocurrency out there. He has talked about some few smaller alts like Canada, United States, and Mexico. Ticker symbol CUM. That's going to be, I think, getting more capital inflows just because Elon has mentioned it. But looking at these opportunities, it's not at the very top of the green dildo that you should be buying into it because you've seen the move already occur. That just does not make sense. You're buying into a green dildo, it's almost guaranteeing you lose money. The time to be entering these meme coins is when there is not a lot of hype surrounding them. So then you can get in at the low, accumulate, fill your bags. So then when the next hype kind of explosion does occur, you've already filled your bags before the massive parabolic push comes into play. So if you're going to ask me exactly when, I would say almost right now would be a really good opportunity. Looking at Dogecoin, that's going to be kind of your meme coin leader, similar to how Bitcoin is the cryptocurrency leader. Before the bull run of the end of 2020, 2021, we saw BTC come back and take a lot of its market dominance back from the cryptocurrency market because BTC starts the bull run and then the alts follow. During a bull run, things can change a little bit because there's an altcoin frenzy, but at the start of every bull run, BTC takes a lot of the dominance back because that's the initiation of the bull run, and then the altcoins rally. Similar to the meme coin, I think Dogecoin is kind of going to be your main meme coin I guess, momentum initiator, I guess you could say, where Dogecoin is going to be opening the gates for other meme coins to rally. Things like SafeMoon, Elongate are ones to be looking out for as well. They have quite a bit of holders, got lots of marketing, and that's going to be something that is going to be a huge factor in the meme coin market, is the marketing. How much exposure are they receiving through social media, through paid advertisement? All that stuff is a major player. It's not so much how quality of a project it is. It's good tokenomics, very important, but more so the marketing and the exposure that it's able to attain for new investors, new traders to learn more about them and gain awareness. So that's going to be where we're going to end off this video. It's a little bit longer, but I just want to really illustrate that the bull run is not over. The best time to be entering investments and trades is not going to be at a very top dildo when things are already up 200, 500%. That just does not make sense. The best time to be investing and trading, or more so investing, less so trading, would be times when there is a lull in the market, there's a lack of hype, there's a lack of interest in your favorite altcoin in a bull market. These are the best times to be investing because these are going to be the higher lows that you're going to be able to average into. If you're dollar cost averaging, if you're looking for reversals, these are the times where you're going to be thanking yourself later on in 2021 that you were able to buy the dip, because in our opinions, the bull run is still yet to fully form. We've already seen, let's say, 40% of it, 50% of it, and the next 50% is what's really going to be astonishing, because let's say back in 2017 in the previous bull run, the final parabolic push was like 75% of the move, right? The first quarter is not much compared to the last half. Or the first half is not as significant as the second half. So I think the altcoin season round 2 is going to be even more aggressive and even more astonishing to people who don't really truly understand the possibilities of the crypto realm. But like anything that goes up that quickly will go down just as fast, like we can see here within the meme coin market. So take your profits in these joke currencies. They are not true projects, but I think there's some unbelievable opportunities in them. If you have like a few $1,000s to just throw around and invest in that you're very, very comfortable losing, this would be a good opportunity. Even if it's hundreds, just invest something that you are 100% comfortable with losing, because these are not actual investments to make the long term. Things, if we take a step back on the previous page of Ethereum, with Cardano, with Polkadot, with Solana, these are real world use case projects that I think have a ton of potential. This page as well, XRP, Stellar, MakerDAO, Go, and Uniswap, Pancake. I think these are really good opportunities to invest in for DEX opportunities. But just keep in mind that we are in a meme coin market, in short. There's a lot of retail traders that just have too much information. It's like paralysis from over-analysis, so they just don't know what to invest in. They're just going to be looking at things like Reddit and random YouTubers mentioning shitcoins are good projects, and they'll just go with whatever that YouTuber is going to be recommending instead of actually doing their proper due diligence. So this is a market of marketing, not real world use case projects that have tremendous value to the world right now. Over time, the shit projects will filter out and the real world use case projects will proceed and persist and will end up on top. But in the short term, I think there's a lot of money jumping into whatever hype coin is getting the most attention. So keep an eye out on these meme coins. I think that there is a lot of opportunity in them, but be sure that this is like quick money that you're making that should be taken out and put into real world use case projects that you're able to stake, that you're able to have some longer term longevity for your investment in. So thank you very much for tuning in. Really appreciate it. Hopefully everyone is at least maintaining their portfolios and not absolutely destroying them, over leveraging, and just getting wiped out during this consolidation phase. So thank you very much for tuning in, and until next time, traders, have a good one.